We are about to start our meeting regarding Polish real estate taxation and recent changes. I would just kindly ask to confirm if you can hear me and you can see me in my PowerPoint correctly. If somebody could write in the chat if everything is working technically. Okay, super. Thank you for confirmation. So let's start. Again, good morning. My name is Piotr Zając. I'm a tax advisor and managing director in Accace, Poland. And our meeting today is dedicated to present changes in taxation of real estate in Poland. The changes are introduced starting from beginning of this year. It's quite significant. So let's see what we have in our agenda for the meeting today. So we will start from a short introduction of our company, of myself. Then I will briefly present the methodology of Polish real estate tax, of real estate taxation, and the logic behind. Then we will talk briefly about the reason of changes and the purpose of changes. Next step will be presentation of the core changes itself. And then we will show you some practical examples. We have also some spare time to answer your questions. If you have any doubts, any questions during my presentation, please feel free to write your question in the chat, and we will try to answer them at the very end of our presentation. Okay, so who we are? Accace in Poland is a company which provides comprehensive and complex support to the wide variety of businesses. We are, in fact, part of the Accace group, which has its roots in Slovakia and Czech Republic. We are also a member of the global international network called Accace Circle. So we can provide any support related to taxation, accounting, payroll, or legal advisory almost across the whole world via our network. On the presentation, you can see a short description of our unique features. We are very much focused on the technology development. We have very technologically advanced solutions for the accounting and payroll, a lot of automation, but we are using this also with respect to advisory, tax, and legal support. Myself, I am an expert in the taxation. For over 15 years, I'm focused on the widely understood support for transaction on the real estate market, mostly commercial real estate. That is why part of my focus is also real estate tax, which is very much connected with the real estate market. Okay, so jumping to our main topic of our meeting today, I'd like to briefly describe the methodology of working of real estate taxation. It is important to understand it correctly, to catch the reason of changes, of introducing the changes into the Polish tax system. So basically, this real estate tax is part of the Polish tax system. In general, this tax system can be divided into two parts. One is like general one, which covers all country, all Poland, and second part of our tax system is so-called local taxation system, which is divided across the particular regions and municipalities. Okay, so basically, real estate tax is the same as, for instance, agricultural tax or environmental tax, is part of the local taxation system where tax authority is not our Ministry of Finance. It is the municipalities which are responsible for regulating and collecting the tax in the given region. And this is one of the reasons why this local taxation is a bit difficult and confusing for most of the entrepreneurs, because some of the detailed features may be different depending on the location in Poland, depending on given municipality, on given tax authority. The interpretation of law may be a bit different. What is important is for on average for municipalities in Poland, the revenues of municipality comes in almost half from real estate tax. That is why the approach for in interpretation of rules can be quite aggressive, and tax authorities usually are trying to be as pro-fiscal as possible, because half of the municipality's budget comes from real estate taxation. So it is very important for them to maintain the revenues, to be able to finance the activities. It is also important to know that the tax rate for real estate tax are also established by the municipalities depending on the region. We have maximum tax rates established for whole Poland, but given region, given municipality can decide if maybe can treat some kind of property or buildings or kind of a business sector in more preferable way and apply lower tax rates. This locality, this local feature of real estate taxation is basically the reason for many doubts and many practical problems in application of law. For instance, the treatment of structures across the different municipalities for the municipalities can be different across different regions. Okay, so now I'd like to briefly show you and describe the most important features of real estate tax and rules, how the tax is levied, how it is calculated, and then we will jump to the reason of changes and the shape of the changes. So as I already mentioned, real estate tax is local tax, it is also a property tax. It means that it does not take into account if subject of taxation as a land or building brings the revenues or brings a loss. It's really irrelevant. What is important is the tax is levied on the property, on the value or surface of the selected categories of property, of assets, and it has nothing to do with income. What is also important for especially for foreign investors, is that real estate tax is not covered by any regulations following from double tax treaties or multilateral treaties. So it means that the institutions like double taxation or tax credits and so on are not applicable to this tax. The real estate tax is also not a harmonized tax across the European Union. It means that the directives, as a rule, are not applying to the methodology of taxation. What is interesting is, irrespective of the fact that real estate tax is not harmonized, it is a subject of European Court of Justice rulings, but in the different, let's say, background, in the different view. It is quite common that real estate tax is subject to discussion in the light of public aid regulations, because, as I mentioned, because of the locality, some of the municipalities are applying special exemption. For instance, there are common exemptions for green energy investors, and quite common. This is treated as forbidden public aid in the light of European regulations. But it is important to know that it is the sole discussion in front of European Court of Justice is not referring to the rules of taxation, but rather about legality of public aid. Okay, so we really need to look at the real estate tax and understand it in a way that it is really local, in the meaning of it is Polish domestic regulation, not covered and not influenced by any external directives or treaties, and it is regulated by our domestic rules. As a first point, it is important to understand who is in fact taxpayer of real estate taxation. On the PowerPoint, you can see the main categories of the taxpayers. The owner is the first and most common, and I think most intuitive category of taxpayers. It is simply the owner of the property or an asset which is indicated in the Local Taxation Act as a taxation subject. So it's quite intuitive and simple. I don't think there is a need to extend it somehow. Second category, which is indicated in the Local Taxation Act, is independent possessor. Independent possessor is the construction following from the Polish Civil Code, and it defines the situation when given entity or individual is disposing an asset or a property in a way as it would be the owner. So in practice, it covers quite often the situation when somebody is for instance, using a plot of land and is convinced that he's an owner of this plot of land, but in fact, from the formal perspective, the situation is different. He is not the owner, but tax regulations, especially local tax regulations, are treating this person, which is using the plot of land as an owner, is treating this person as a taxpayer. Third category of taxpayers is perpetual usufructure of land. It is again Polish specific. The usufruct right is kind of a long-term lease concluded with municipality or our fiscus. It is the legal construction which is very close in practice to the ownership, but it's introduced because of some historical reasons in the Polish civil code. And the last category of taxpayers of real estate tax are possessors of public property based on the special contract. It is a situation when an entity or a company or a business is using property which is owned by the municipality. So this is like very uncommon situation, but it happens that the businesses or individuals are leasing or renting the property which is owned by the municipalities and is used in the business activity. Subject of taxation. The Polish Local Taxation Act is indicating three categories of taxation subject. One and first and most simple one is land. We are talking here about plot of land which is taxed based on the surface of this land. It is quite simple and quite common. There is not much controversy in the terms of rules of taxation. The mostly doubts are focused on the classification of agricultural lands. It happens quite often that forests or agricultural lands are used in the business activity, and it's quite common to argue with the tax authorities if this kind of situation triggers the tax obligation in agricultural tax or in real estate tax. Second and also very intuitive category of taxation are buildings. We will see the definitions of buildings in next slide. Next slides. Buildings are subject to taxation also based on the surface, but based on the usable surface. It is usually the certified evaluators are providing the measurements of the buildings, and based on this, the tax per square meter is levied on the buildings. The most difficult and most complex category of taxation subject are structures. This is in fact the category which covers a lot of discussable categories of objects. For instance, like pavements, like ramps or advertisement poles. Solar plants are also treated as structures. The whole let's say category of construction objects which are not buildings should be always checked and verified in the light of definition of structure in the Polish Local Taxation Act. It is important to mention from the practical perspective that there is an obligation to submit annual tax return, which is according to the standard regulation submitted until end of January. And normally, when there is no changes in the business and when there is no changes in the regulations, it is quite a simple technical function where the taxpayers are simply transposing the values from one tax return to second one for the new year. But this year, it is the task is much more difficult because of the changes that we are going to discuss in a moment. Okay. And what happened actually? Why we are talking about the changes now? As I mentioned, the real estate tax regulation is quite difficult because of the locality, because of the specifics, because of the technical aspects which are connected to the construction of the objects. It is also important to note that the Polish Local Taxation Act is almost 30 years old. It means that when the regulations were developed, there was no Facebook, there was no AI, there was no green energy, almost no green energy, there was no electrical vehicles. So the technical development and the let's say general development of the business and our environment creates so many difficult topics and difficult cases for these regulations that it is really almost impossible to apply it in the new reality. That is why for some time it is already discussed in Poland that real estate taxation systems should be either changed in the very extensive rules or should be replaced by some kind of different taxation system which will ensure the revenue inflows for the municipalities. But the direct reason for the changes that we are discussing today are rulings of Polish Constitutional Tribunal. In the middle of 2023, we had two very significant rulings, which forced our parliament to change the regulation. But before I will shortly describe these rulings, I just want to outline the role of Constitutional Tribunal in Poland, because Constitutional Tribunal is on one hand part of the Polish court system, but it is important to know that it does not take the rulings or judgments in the individual cases. Polish Constitutional Tribunal is responsible for maintaining the compliance of acts, also tax regulations, of their compliance with Polish Constitution. So in these two cases that we are going to shortly discuss in the next slides, Polish Constitutional Tribunal was not verifying the particular case of the taxpayer, but the rule of tribunal was to answer if currently binding regulations are in fact in line with Polish constitution. Okay, and the first and the most let's say important and directly related to changes ruling is the judgment of 4th of July of 23 in the case where the court was considering taxation of the silo of the pit where grain was collected. So the doubts of the taxpayer and the dispute of the taxpayer with the municipalities was focusing on the classification of the silo as a structure or as a building. The importance of this discussion for the taxpayer was that building is subject to the taxation based on the usable surface, and the structure is subject of the taxation based on the value. The amount of real estate tax is 2% of the value of the structure. So taking into account the specific of this structure of silo, the more preferred option for the taxpayer was to classify it as a building. And of course, as I mentioned, the municipality to protect their revenues tried to force the interpretation that the silo is in fact a structure and should be subject to taxation based on the value. There was number of appeals in this case, and finally the taxpayer decided to file the constitutional claim to prove that Polish tax regulations are not in line with constitution, and the outcome was that Constitutional Tribunal ruled that according to the currently binding Local Taxation Act, it is not possible to clearly answer the question how this silo should be taxed. And on top of it, the tribunal indicated that it is not possible that, according to the Polish constitution, it is not possible that the important element of construction of tax, like subject of taxation, is regulated by the construction law and not the tax law. It is important to mention here that there are general rules of tax law which are treated as constitutional rules. One of them is autonomy of taxation system, and based on this regulation, it is stated that all important elements of taxation, like like definition of a taxpayer, definition of subject of tax, tax rates, all those important tax features should be defined by the tax regulation. And as you will see in the next slides, the regulation which were binding in Poland until end of 24 referred very extensively to the construction law, which is different branch of tax than of a branch of law than tax law. The ruling of Constitutional Tribunal obliged the Polish Parliament to change the regulation within 18 months. So the ultimate deadline when the part of the Local Taxation Act lose their binding force was end of 24. That is why we had really, let's say, a speedy speedy legislative route, which were ended at the end of 24, and now we have new definitions of structure and the building. Second constitutional tribunal ruling, which forced the change of the regulation, was referring to the parking lots in the residential buildings. The reason was that there was inconsistency between treatment of parking lots which are subject to one ownership right with the residential and which are subject to separate ownership right with the residential. The ruling in this case was quite simple. The Constitutional Tribunal concluded that there should be similar tax burden and similar tax rate for both categories of parking lots. And again, this is also introduced to the to the amending act. As I mentioned at the beginning of my presentation, the real estate tax and the necessity of changes was already very widely discussed for several years in Poland. There was even a special unit in the Ministry of Finance which was focusing on the developing of new tax system for real estate taxation. So it was quite challenging for the tax authorities to propose the regulations, which on one hand will ensure the revenue inflows for the municipalities, and on the other hand will let's say keep the taxpayers satisfied that they will not be extra taxed with the within the changes of the law. So there were publicly announced assumptions and declarations of the Ministry of Finance regarding the changes. One and the most important one was maintaining the status quo, but not regarding the construction of the law itself, but rather regarding the level of taxation. Basically, the position of the tax authorities and the Ministry of Finance was that they were ensuring everyone that nobody will be, let's say, harmed or extra taxed based on the change of the law itself. Another topic was, and another important assumption was to clarify the complex definitions of structures and buildings. As you will see in the next slides, it was these definitions are really very casuistic and practical, and it's difficult to apply them in the similar way to, let's say, different categories of structures. One of the assumptions was also separation of tax regulation from the construction law, and it directly follows from the first Constitutional Tribunal ruling that I mentioned before, because it was part of the reasoning for the judgment. So it is quite logic that the Ministry of Finance had to take this into account. And the controversial assumption, which was very widely criticized by the practice, was that tax authorities and the Ministry of Finance is intending to use current practice and court judgments in the future. So it means that they wanted to shape the definition in a way that they will still be able to refer to old tax judgments and tax rulings. It seems a bit controversial, but those are the statements of Ministry of Finance. We cannot discuss it and question it. And we will see in the next slides how in practice it was applied. What is important from the practical perspective for the entrepreneurs and for the investors, for the businesses which are owning the assets or the property subject to real estate taxation is the reporting. As I mentioned, the final shape of the regulation was unknown until December of 24. So for part of the business, it is quite challenging to really review their property, their assets, and decide how to report them for 25th. So in the amending act, there is a possibility to postpone the deadline for submitting first tax return for 25th. Standard deadline, which is included in the Local Taxation Act, is end of January. So we can get another 2 months to duly prepare the tax return, to perform the cost segregation analysis or check the classification of structures or buildings. But it is important to know that it's not happening by virtue of law. The taxpayer must apply for this extension, must notify the tax authorities, and should pay the payments of tax for January, February, and March in the amount of monthly average from 24. So once any of this condition is not fulfilled, the taxpayer will be in delay of submitting tax return and paying the tax due. So if any of you is planning to submit the tax return later than end of January, it is important to verify if conditions are met, and it is important to submit the notification to the tax authorities to use this possibility. Okay. So first part of the crucial and critical changes in the Local Taxation Act is change of the definition of building. It may raise some question marks why the definition of building is amended if the ruling of Constitutional Tribunal referred only to the definition of structure. And the reason is quite simple, because construction of like formal construction of the definition of both building and structure is technically quite similar. In the old regulation, in both cases, there was clear reference to the construction law, which is forbidden according to the rule of tax law autonomy. So, looking at the definition of the building, we can see that it was a bit extended. One thing is that reference to the construction law was removed. So before, the definition was that a building is a construction object within the meaning of the provision of the Act Construction Law. And now we have the definition shaped in a way that construction object must be erected as a result of construction works, and it should be treated together with installations, ensuring its intended use. This part of definition is actually very important for most of the taxpayers, and the reason why was the discussion and very common dispute with the tax authorities regarding taxation of the structures which are located inside of the buildings. It was very controversial, but and very aggressive. But some of the municipalities were tend to treat the objects which fulfill definition of structures and are located inside of the buildings. They tend to treat it as a separate structures. For instance, the elevators was quite commonly discussed issue. So that the municipalities were trying to tax the elevators based on the value. And the approach of the courts and approach of the taxpayers was that elevators are something which is really needed and necessary to properly use the building. That is why it is an element of the building and not separate subject of taxation. And this is exactly what is right now included in the definition of the building. So simplifying, all the objects which fulfill the definition of structure, which are located within the framework of the building, but are ensuring intended use of the building, cannot be taxed as a separate object. It is an amendment which should be considered as a positive for the taxpayers and can really limit the taxation in some cases. But this is only the first part of the definition of building. We have also other factors like permanently attached to the ground. The wording is exactly the same before the change and after the change. What is different is the understanding of what does it mean permanently attached to the ground. Before the changes, there was no, let's say, legal and formal definition of permanent attachment to the ground, but the common approach of the courts and tax authorities was that permanent connection with the ground occurs when something cannot be moved without performing earthworks. So whenever any digging or drilling is necessary to move a building or an object, then it is considered as permanently attached to the ground. Now, permanent attachments to the ground is defined in the Act and is considered as a physical connection with the ground, which provide stability and protection against external factors. Another factor of the building is permanent separation from space by building partitions. And building partitions normally means walls, but not in all the cases. We know some practical examples where even poles or or advertisements were considered as building partitions, which somehow separates the building from the space. It is something that was not really changed, but also it was very controversial, and we expect that there will be still a lot of doubts regarding application of this factor. Third factor of the building is that it should have foundations and a roof. Again, we don't have big changes here. We still don't have a specification. What does it exactly mean having foundations? Within new technologies, new developments of construction works, it is really not so obvious that all the buildings has foundations. For instance, the construction on the poles, which are in the ground, is very commonly questioned, and it's difficult to state if it is a foundation or not. The same goes with the roof. It is not specified what we should do with the roofs which are not permanent, which can be removed, or which are only partially on the building. So this doubts will remain with us, and we will still try to support our clients using the court judgments in this case. And the last part of definition, which was included in the amendments, is very directly triggered by the Constitutional Tribunal judgment, which I mentioned before, because it excludes directly from the definition of the building the structures in which bulk materials in pieces, liquids, or gas can be stored for which the basic technical parameter is capacity. And what we have here is exactly the reference to the understanding of the silo, and this is triggered directly by the case which ended up in the Constitutional Tribunal. So the Ministry of Finance answered directly to the question of the taxpayers that silo, even if it fulfills the definition of building, cannot be considered as a building because the basic technical parameter is a capacity, not the surface. So bottom line is taxation for the silo is based on the value, not on the surface. This definition will probably create some questions on the warehouse market, but we will try to discuss it a little bit later. Okay. Second part of the tax amendment is change of the definition of the structure. Again, understanding the concept of structure itself is difficult, and it covers really extremely wide variety of objects. It is even more difficult to build the definition, and to build the definition which will be autonomous from other branches of law is even more difficult. So before the regulation, before the amendments, Local Taxation Act provides for the definition of the structure in the shape as follows. A structure is a construction object with the meaning of the provision of construction law that is not building or a small architectural object. Analyzing this part, we can see first factor that it refers to the construction law. The the argument of Constitutional Tribunal is here breached about the autonomy. But what is also important is that the definition gives priority to the classification of the as a building or small architectural object. So something that is fulfilling the definition of the building cannot be even considered in the light of definition of the structure. When we consider as some object in the light of classification as a structure or as a building, first check should be done in the light of definition of the building. If something is fulfilling definition of the building, then we should not even consider it as in the light of definition of structure. And the same goes to small architectural object, which is provided in the construction law. This is exactly the part of the argumentation which was used in this silo case, which triggered the Constitutional Tribunal judgment. Second part of the definition of structure is construction equipment within the meaning of construction law provision. So again, reference to the construction law, which is not compliant with the Constitution, associated with the construction object, which ensures the possibility of using the project in accordance with its intent purpose. So as you can see here, the definition of structure until now consisted of two parts. One was structure itself, defined based on the construction law, and second part of the definition was the equipment which ensures the usage of a construction object. And as you saw on the definition of the building, now this equipment, this installation, which ensures the usage of the object in case of building, is treated together with the building. So this is first material change where really taxation of installations of the equipment which is supporting the usage of the building is moved from the classification of structure to the classification of building. And for the new definition, for new regulation, the Ministry of Finance decided to drastically change the, let's say, technical formation of the definition, and they created the Annex number 4 to the Polish Local Taxation Act, which enlists the number of objects which are considered as a structure and which are subject to the taxation based on the value. We will present some brief examples in the next slides, but there was also a separate category of structures created, which is dedicated to, part of it is dedicated to, let's say, energy and green energy market, where it is directly indicated that construction parts of wind farms, nuclear power plants, photovoltaic power plants, biogas plants, energy storage facilities, all these categories are treated by virtue of Local Taxation Act, are treated as a structures and are subject to taxation according to the 2% of their value. Second part of this section refers to the cable railways, ski lifts, ski jumps, and which are not considered as a buildings. And those are basically selected categories of structures which were subject to disputes with the tax authorities and were subject to court proceedings in front of the administrative courts. The definition of structure provides also for the explanation and specification of construction part and equipment, which is related to the indicated objects. So any, let's say, supportive infrastructure related to, for instance, cable railways or ski lifts is also subject to taxation as a structure, so based on the value, but it is only limited to the construction parts of this infrastructure. Another category of structures indicated in the definition is foundations for machines and devices which are technically separated. The example of this case is for instance foundation under the lifts or ramps or railways or which are used in the warehouses. Usually under this kind of machines or devices, there is some kind of solid foundation, and this foundation is subject to the taxation as a structure, not as a small architectural object. Important factor is that the structure or foundation of infrastructure must be erected as a result of construction work. Construction works again are defined and can be checked. Basically, it covers all the construction activities, including also installation works. It is important that installation works are also included in the definition of construction work. Okay, and now I would like to show you briefly the some selected categories of structures from the annex. As you can see, not everything is here, but we tried to provide for some most let's say suitable examples, which will show you how the taxation concept is structured right now. So basically, the tax authorities tried to group the categories of structures in the let's say few groups which are somehow connected by the factor of a market or construction methodology or nature of use. First category is outdoor sport facility, other than mentioned in item 2. Item 2 of the Local Taxation Act refers to the small, let's say, sport units, sport facilities like playgrounds or small gyms which are outside of the building, or bicycle parkings. Objects like this are not considered as a structure and are not subject to taxation. This categories refers to the outdoor sports objects like stadiums, like running tracks, all this kind of objects are considered as a structure. What is important is their text based on the value, but we need to remember that priority is classification of the building as a building. So once we have, for example, on the stadium, we have some buildings. The buildings itself must be treated separately and excluded from the taxation of the structures, and should be subject to taxation based on the usable surface. Position number 4 of the annex refers to the elements of the water treatment plant. It is again kind of the complex object which was very widely discussed and very and commonly questioned by the tax authorities, and the taxpayers also tried to question the classification as a structure. Here we have enlisted in the number 4 and 5, we have enlisted categories of objects like raw water tank, technological hall, or separation chambers, which are all elements of the infrastructure of water treatment plant. So water treatment plant is treated as a complex structure, which must be taxed based on the value, but again with exclusion of the buildings. The buildings are classified separately based on the definition of the building and not included in the basis of taxation of the structures. Okay, and number 6 is the most commonly discussed object. It refers to the silo. As you mentioned, as you remember, I mentioned it was excluded from the definition of the building, and it's included directly in the position 6 of the annex. So we have now clarity that any silo or a pit where bulk materials, liquids or gas are stored is subject to the taxation as a structure, under the condition that basic technical parameter is determined as a capacity of this silo. It is already this is very new regulation, but we already have some questions how to treat the warehouses, especially in the light of this disposition. And the main doubt refers to the warehouses with which are fully used to store the materials in pieces. So the warehouses with automation system where the storage takes place until the very roof, and it is the capacity is determining factor of the use of this storage, is something that is very commonly used, and it's difficult to answer right now, but priority is given by the regulation to the classification of the building. So silo and the pit defined by the capacity is classified right now as a structure and taxed based on the value. Another category is hydrotechnical object. Examples are a water level, a dam, a flood embankment, discharge object. This kind of hydrotechnical object are classified as a structure. Point number 10 of the annex refers to the container object, which was also subject to a number of discussions. Right now, it is very common to use container object as even as a buildings to connect few containers and refurbish them and treat them and use them as a building. These kind of containers usually don't have any foundations. They're put simply on the ground or some kind of basic level. And it was very commonly discussed if this kind of container should be treated as a building or as a structure. As you may remember, the definition of connection, permanent connection with the ground, was that to move the object, there was necessity to use the earthworks, and to move container, there was really no earthworks needed. That is why the taxpayers were avoiding the taxation and not paying the tax for the container objects. And now we have direct. On one hand, we have direct indication that container object is not treated as a building; it is treated as a structure. But on the other hand, the condition for taxation is permanent attachments to the ground. And now we have also a new definition of this permanent attachment to the ground as some kind of solid connection with the ground. Position 11 refers to the shelter objects. It is any kind of a tent or a shelter used by the taxpayer, and in this case, also small playgrounds and ESG objects are excluded, but the object like warehouse shelters, like shelters over the sport objects like stadiums, are treated as a structure and subject to taxation as based on the value. Another category of structure are elements of any kind of standalone networks, and those are any objects which crucial factor and characteristic parameter is length. Examples are water pipelines, gas pipelines, or heat pipelines, and those objects are treated as a structure. And what is important is the word standalone, because we need to remember that these kind of elements usually are attached to the buildings are used as a supporting infrastructure for the building. And as long as it is supporting infrastructure of the building, it is subject to taxation together with the building based on the surface. And any standalone networks which are not connected directly to the building or the structure are considering as a structure itself, and will be subject to taxation based on the value. Okay. Last categories which we want to mention are something that is obvious for for somebody who has anything to do with construction law, but and the real estate taxation, but for commonly it is not understood as a structure. Here we have examples like roads, entrance, exit from the road, parking bays, any crossing or parking lots are also treated as structures and are subject to taxation based on the value. In many cases, it is important to have simple pavement or something solid on the ground, and only this is sufficient to treat given surface as a parking lot and treat it as a structure. The objects like towers, like post, lightning, or advertising, which are permanently connected to the ground, are also treated as a structures. It was already like this before the change. The only thing is right now it's directly indicated in the annex. But what is important is here is the point number 28, which indicate tent covers, like pneumatic covers, shooting range, sales pavilions, which normally and intuitively are treated as something which is not permanent and temporary, and we do not consider it usually as some kind of permanent structure. But for the real estate taxation, it is treated as a structure and subject to taxation of based on the value. So we need to report this kind of objects as well, even though they are to some extent temporary. Okay, so this is those are the most important issues related to amendments. I am now looking at the chat if we have any questions. Oh, I see there's discussion about. Okay, I see that we don't have any questions right now. So from my side, for now, it's everything that I wanted to present to you. I just want to mention that if anyone would like to have some detailed discussion or detailed questions related to particular cases, we are open to discuss it. We will provide also mailing for after our webinar. You will receive the presentation and also contacts where you can ask the questions directly. Okay, so thank you very much for your attention and your time, and have a good day. Thank you.